My name is Dr. Issy Bacher, and it is my pleasure to present the CycleTrends Forex trading program to you. When trading Forex, one aims to make quick profits both within the trading day and within a few hours. 20 pips or more profit within a few hours every day is the target of the trader, and this would lead to a sideline business. The CycleTrends program gives the trader the technique to do this. Once the basics and the theories of the cycle indicators have been studied and understood, the trading technique using these indicators are logical and easy to use. To trade Forex with the CycleTrends program, you need the program to be supplied with a live feed of data which comes in as each and every currency trade is made. The live feed then enables the trader to view and analyze the program in different and very short-term periods. The time frames for these periods can vary up to 300 minutes. But as Forex trading is ultra short-term, the trader using the CycleTrends program initially confines to the 60, 15 and 10-minute periods. As soon as you open up a chart for trading analysis, it will default to 4 boxes with a price in the first box and the cycle trading indicators in the other 3 boxes. As you see in this example, we have a 5th box to show an extra indicator. Now in front of you is a 15-minute period chart of the pound dollar. It is a single chart, but as you will see in the trading examples further on, we use 3 periods when trading Forex. So I'm going to use this chart in front of you to describe the 3 basic indicators that we use in Forex trading. I will follow this up with examples showing you how one can trade using these indicators to either go long or short for quick and easy profits later on. So as I said, as soon as we open up a chart of currency in the CycleTrends program, it defaults to 4 boxes. And in box 1, we will have the price graph. In box 2, the cycle graph. In box 3, the overbought, oversold indicator we call true OBOS. In the 4th box, we have the trigger indicator that we call Trendek. We've added a 5th box, and in the 5th box we have the Trendek 55 trigger indicator. By the way, we are looking at a graph of the pound dollar. Now, the top box always contains the price graph, and the price graph can be either in closed line, which it is here, or can be in candlesticks. And on this graph and in this graph we see the patterns of the price as it moves along, and we can draw our trend lines. Trend lines are very important in trading Forex. Over here we have drawn a support trend line. Support will connect the bottoms of the price. A resistance trend line will connect the tops of the price. And we use these trend lines in a technique called breakout trading, which I'll show you in the examples further on. Breakout trading is a technique that we use when a price breaks the support trend line. We call that a breakout, and we put that price on the trading platform. Now, the most important indicator that we use in Forex trading is called Trendek. We have Trendek here in box 4 and Trendek in box 5. It is the most important indicator because it shows the immediate trend. It is unique and original. It is a very short-term cycle indicator, and it is derived from the Fourier trend line that you see on the price box. And the Fourier trend line is this red line here that you see here. It looks like a moving average. So to stress again, it is a very important indicator because it determines the immediate trend. And when you are trading Forex for ultra-short quick profits, you want to know what the immediate trend is. Now the number But you see here, Trendek 36. The 36 refers to the number of cycles in this Fourier trend line, and Trendek 55 would be 55 cycles in this trend line, and the more cycles there are, the quicker the indicator works. Now it is important to understand how Trendek works, and this is how it works. Here is the Trendek indicator. It is divided by a zero line into two fields, a positive field and a negative field. When this indicator moves from the positive through the zero into negative, it's telling you that the trend is now negative. The immediate trend is now negative. And when it moves from the negative through the zero to the positive, it tells you that the immediate trend is then positive. So if we look at these two indicators, 36 and Trendek 55, in Trendek 36 you can see that the trend, the immediate trend, has gone from positive to zero to negative, so it is negative, and this is confirmed in Trendek 55 in the fifth box here as well. Now this is the reason why we have two Trendek speeds. The principle is that both must move into a positive zone, in actual fact in 3 periods. I'll show you this further on, and in doing so it will signal a trigger to go long, or put it another way, buy. And when the two Trendeks move into the negative zone in 3 periods, this would be a signal to go short. The logic behind this is that if the Trendeks are giving the same signal in 3 periods, then the signal has more than a 70% chance of being correct. In box 2 we have the cycle indicator. Now the cycle indicator differs from Trendek in that this indicator actually shows the future trend, whereas Trendek shows the immediate trend. There is a difference, and this is how it works. The program examines the price mathematically and computes cycles that have been repeating themselves in the price as it trades along. We call these cycles genuine cycles. It's pretty straightforward and logical. The theory is that if the cycles have been repeating themselves in the past, they will keep doing so in the future and can therefore be used for prediction. So what have we got here? We have what we call the cycle curve. The cycle curve is an amalgamation of all the genuine cycles. And from here backwards is the cycle curve of the past, and from here forward is the projection, the future projection. In this case, the future projection is showing sort of like it's going to move sideways, like the price is going to move sideways. Notice also that the cycles fit the movement of the price, in this case the pound dollar, very well. Here we have a cycle bottom, and here we have a low of the price, and over here we would have a cycle top here and a peaking of the price. Now, as you will see in the trading examples, Forex trading is so quick that we are not really interested in the projected trend in the longer time frames like the 60-minute period, but we would definitely like the cycles in the very short-term time frames like the 10-minute time frame to be moving or to be about to move in the same direction as the immediate trend as indicated by the Trendeks. And as I say, we will show you this further on in our two trading examples. In box 3 here we have our overbought oversold indicator, which we call true OBOS. This indicator tells you whether the price of the currency you're examining is either overbought or oversold, and the indicator is bounded by two lines. The red line here, if the price moves up and the indicator moves to the red line, it tells you that the price is overbought, and if the price moves to a low point, which results in the indicator moving to a green line, it tells you that the price is then oversold. So if we were going long, we would like the price to be in an oversold area, and if we were going short, we would like the price to be in an overbought area in the true OBOS indicator. Or to put it another way, if we're going long, we don't want our price to have taken the indicator to be very close to the overbought area, and if we are going short, we don't want to be looking at a price that has taken the indicator very close to the oversold green line. So to sum up, to make a trading decision to go long or short, we need the Trendeks, the meter trend, the cycles, the projected trend, and the overbought oversold indicator, true OBOS, all to be reasonably confirming each other. But as you will see in the actual trading examples further on, there are minor exceptions that we have to take into account. It must be stressed here that though the core of the CycleTrends program is based on cycles, cycle indicators, there are other indicators that can be used, such as MACD, stochastics, RSI, Bollinger Bands, moving averages. So we have covered the basics of the cycle indicators, and we will now move on to show you how they are used for actual trading examples, to go long or to go short.